If you are a break-even trader, maybe slightly losing, and you're looking for ways to improve your trading and finally get out of this break-even period, this is a video that's going to change your trading. So this is a trading journal from a user, and he asked us to take a look at his trades and his data and help him improve. And we're going to do that. So we're going to the Edge Finder first, and what we can see that there are three big issues in his trading. The first one is profitability. The second one is the trading process. And the third one is risk management. And we're going to go through all of them one by one. And this is a journal that is going to represent a lot of other traders. I think a lot of other traders will see themselves in this data and in this trading process. So the first thing that we can see is that the reward to risk ratio of 0.9 and the win rate of 52% is giving you this roughly break even, slightly losing performance. With a 0.9 reward to risk ratio, you need 52.8% to break even, and he is slightly below that. So this is a reward to risk ratio we need to work on. And typically, whenever we see a low reward to risk ratios like that, typically there are specific ways that the data shows how you can improve that. And we're also going to focus on how we can get the win rate up. So let's do that first. So what we want to do, and what I want to do first is I want to go to the chart lab and specifically to the risk distribution. And here I want to change it to R multiple because as we've seen, he has issues with his R multiple. What we can see interestingly is that his average winner is 0.86 and his average loser is minus 0.89. So his average loser is bigger than his average win. That's never a good starting point. There are ways how you can be profitable with a 1-to-1 reward to risk ratio, but for that you need a much higher win rate. So we want to dig on that. How can we get the winners up? Let's try to see if there's a way. What I want to do next is in the chart lab, exit analysis. And here I want to look at his winners specifically because we want to see how can we get the winners up. So when we look here at the data underneath this graph, we see that the updraw on his winner is 95%. This means on his winners, the price comes 95% towards his take profit target. So almost always the price is reaching his profit target. The problem is here the exit on his winners. It's only 64%. So although the price almost always makes it towards his take profit, he's exiting his winners too early. And that seems to be an issue that is dragging down his reward to risk ratio significantly. So this is the first big thing that we can see in the data. The trader has to trust his initial analysis because it seems like when he's picking trades and they keep going to be winning trades, he's exiting them too soon and the price almost always would have kept going on further. So trust the process. Your winners seem to work out really well and you can get way more out of this. Another thing that I want to really analyze here is the trade comments section. So we are here on the trade comments section and you can see on the right, he has comments such as bad entry, did not assess all scenario, emotional trade. So here are 10 trades and here are 13 trades. They seem to be quite big losses. And what I want to do now in the next step, let's try to get rid of the bad entry trades. There are only 13 trades as we've seen. So we go to the pre-trade comments. We look at the bad entry comments and we want to exclude them from our data. So how does it look now? Suddenly we go from -7 to +7. The win rate only goes up slightly, only 5%, but we keep that in mind, 55% win rate. The reward to risk ratio doesn't go up a lot because this seems to be an issue with his entries. And just taking out the bad entries doesn't fix his reward to risk ratio, which makes sense, right? But we keep that in mind. We have a slightly higher win rate. What does a 5% higher win rate mean for this trader? For that, we have a special tool here on the strategy lab, the simulator. So what we do here is we take the current performance from the trader. Overall, he has a 50% win rate, average gain 239, average loss minus 275, and the average R multiple is 0.87. What we can do is, let's say we want to simulate a few potential trading account developments. Let's say we want to see what happens after 200 trades and we want to look at, let's say, maybe 15 simulations. So each different color here represents a certain account development, right? And we can see we're starting from 2000. Here, this is the 2000 line, and we can see way more lines are below the starting point than above it. We can click on this a few times to confirm that, and you can see we have 1, 2, 3 lines above the starting point and 12 below that. So we can see that he is right at this break-even threshold, but slightly losing. So we have seen the win rate could go up 5%. What does it have an impact here on this performance? Let's click on it a few times and we can see the quite a big difference, right? So this is the 20,000 starting point, and now we can see we have 1, 2, 3 lines below and 12 above it. And when we keep doing that, the same holds true, right? 1, 2, 3, 4, 5 below, 10 above it. So more times than not, this trader will end up with small wins, but nevertheless a winning performance compared to the 50% win rate. So just trying to avoid some of those bad entries will already have a big difference in his overall account development. But we have also seen that he seems to be closing his winners too early. So let's try to get his average gain up a little bit. Currently his average gain, which means the average winner, is 239. Let's say it's not even a 10% increase, but let's say we go to 260. So his average loss is still bigger than his average win. But when we now look at the data, we can see now the winning graphs are pointing upwards much, much stronger. And now he barely has lines that end up below the starting balance. So this already has a very, very big impact on the future account development, just by getting the win rate up a little bit and just by increasing his winners a little bit. He has a much higher chance of becoming profitable. So remember, when we looked at the Edge Finder, we also saw that there are issues with the trading process. What does it typically mean on a trading process? When we look here at the trading hours, 16 and 10 setups. So he's trading 10 setups and he's trading 16 hours per day. Not every day, but he has 16 active trading hours. And this combination, based on 10 years of analyzing data and looking at hundreds of thousands of trades with the Edgewonk review, we have seen that this is a really bad combination. And typically a lot of struggling traders trade way too many setups and trade way too long per day. So we go to the chart lab and we're gonna go to the performance by time. And here we're looking at the hour of the day. When we look here, his most active hours seem to be from 1 p.m. until 3 p.m. So it's right here, right? 21 trades, 24 trades, 14 trades, and then 9 trades here at 4 p.m. And here 12, he has 8. So 1 p.m. until 4 p.m. he has most of his winners, but here he has quite a lot of losses. What's going on here? We could take a look at the 12 and the 3 p.m. trades. So you can do that in Edgewonk very easily. So we open the filter and then we just want to look at the hour. We want to look at the 3 p.m. trades and we only want to look at the ones entered at 3 p.m., right? So we only have those 14 trades here that were entered at 3 p.m. We go back to our comments section. And what we can see when we close this, we can see better. Half of those trades tagged did not assess all scenarios. So again, those are trades that he took that are against his trading plan and don't fully match his trading strategy. But we can take this one step further. So we open the filters, we get rid of the hour by time. And what I want to do now is under advanced, I only want to look at his actual trading edge. So we only look at good entry, good stop, good target. And what this means is that you're only looking at trades that fully fit his trading rules and his strategy. And you can basically say everything else is noise because Those are trades where he broke the rules on his entry, on his exit, and didn't manage them properly. So those are trades that actually are not within his trading strategy, and you can say they are noise. So what we can see now is we go to a 12% return. So from -7, where he's currently at, to +12, and we go to 65% win rate. The average reward to risk ratio doesn't go up a lot. It does go up a little bit to 0.98, so almost a 1-to-1 reward to risk ratio. But now we have 65%. What does this mean for us? And what does this mean for this trader, most interestingly? So we are back at the simulator. And what we want to do now is change it to 65. Those are his real edge trades where he's following his rules. And then we assume we are almost at a 1-to-1 reward to risk ratio. Let's assume the losses are still slightly larger than the winners, but not by much, as we've seen, by 0.98. We start simulations, and now no line will go below the starting point. Now he's looking at an almost always profitable account development. Still, there is some noise here. As you can see, every now and then there is an account development that ends up here around break even, or at least close to break even. But you can see the night and day difference. This is the difference between a break even, slightly losing trader and a consistently profitable trader. And those are not big changes, as we have seen, right? We increased the win rate by just stop taking trades that are outside of the rules. This is always easier said than done. But by looking at only his true edge of his real trades where he followed his rules, and slightly increasing his reward to risk ratio, not even to a positive reward to risk ratio, but to an almost positive one, right? We have a 0.98. He is suddenly able to make money with those statistics. The final point from the Edge Finder is risk management. So what do we have here? And what we have here is in the chart lab. Let's go to risk distribution. We again are at our multiple. So the average winner is 0.86. The average loser is at -8.9. And of course, this is not an ideal scenario, because when we look at his drawdown graph, we can see that he does often have severe drawdowns, and it seems like it's very hard for him to get back to break even. Why is this the case? What we can do now is look at his losing streaks. So under consecutive winners losses, what we can see is that he has one losing streak where he has 6 losses in a row, 4 losses in a row once, 3 losses in a row 4 times. So 6 losses in a row with a 1-to-1 reward to risk ratio can be very devastating, because getting out of such a losing streak is going to take 6 winners in a row. However, after you have experienced 6 losses in a row, your mindset is probably going to be a little bit damaged. And then pulling out with 6 winners in a row is going to be really, really hard. So it's going to take really long to get out of such losing streaks. Let's keep looking at losing streaks a little bit more. In the simulator, we look at his current data. And after you've pressed the simulation button, this losing streak probability chart will load. And you can see he had 6 losses in a row. Over 100 trades, what he currently has, there's a 70% chance that he's going to experience such a losing streak. So it's a really, really high probability that there is going to be such a losing streak. And even when we look at, let's say, 8 losses in a row, over 500 trades, there's an 83% chance that he's going to experience such a losing streak. So, and then keep in mind, 8 losses in a row means you need at least 8 winners in a row to just get back to break even. So this is going to be really hard on the trader. We have seen that there are ways for him to get to the 1-to-1 reward to risk ratio when we looked at the exit analysis. But in our experience, based on what we have seen over the last 10 years, is that it should be a very high priority for the trader to work on the reward to risk ratio more. And that's why we have here in the strategy lab alternative strategies, which let you test different target approaches, different exit approaches, maybe a different stop trading approach to try to increase your reward to risk ratio further. Even getting the reward to risk ratio up to 1.5 is going to have a huge impact on how you are able to deal and get out of drawdowns. So we recommend always to traders look at this, experiment with different target approaches. It's really, really easy and simple to do that. And within an hour or two, you have really good statistics that you can work with. And that's going to make a big, big difference for this trader. Improving his win rate seems to be doable by trying to avoid some of the unnecessary losses, improving his reward to risk ratio, but just first of all, trusting his trading process more, as we've seen in the exit analysis, and then going beyond that to see if there are ways to get his reward to risk ratio up even further. Another thing that I haven't really touched on, but it's very important, reducing the trading times will have a massive improvement in his overall routine, what we have seen on past data and past reviews. So his active trading times are 1 p.m. until 3 p.m., maybe even include 4 p.m., trying to get rid of some of those bad trades where he isn't performing, and then reducing and eliminating all the noise beyond that. So you have more time on really preparing your charts, creating your trading plans, and then only trading 4 hours with absolute focus and high energy. I would probably increase and improve trade quality quite a bit. Finally, looking at his setups, he does have 10 setups. And as I've said, the combination of 10 setups with that many different trading hours and active trading hours is not a good combination. We've seen this time and time again on losing and break-even traders. And if you can reduce your instruments, only let's say for the next 2 to 3 months, focus on 3 to 4 setups that actually do make you money, will often have such a big impact on your processes, your routines, your mental game, that this will spill over into many other areas in your trading. So those are going to be the tips for this trader based on the data that we've seen. It's pretty straightforward. It's obviously not going to be easy to implement those changes, but there's definitely a very clear way forward for this trader based on the data.